Hi, everybody. My name is Kate, and welcome to our webinar today, The Future of Business Planning with SAP BPC 10.1 and HANA. You'll hear from two people at Dickinson and Associates today, first from Rob Jerome, our Vice President of Innovation and Technology, and then from consultant Jason Bliss. If you have any questions throughout the presentation, you can submit them using the Q&A dialog box, and we'll be answering questions after the presentation and demo. And now I'll hand things off to Rob.
Thanks, Kate. I appreciate everybody joining us today. We're really excited about today's presentation and demonstration of BPC 10.1. This is the first in a series of 6 webinars that we'll be having between now and the end of the summer, focusing on some of the newer technologies in SAP. Some folks attending today may be familiar with some of the past webinars we've done on native application development on HANA, SAP Fiori and Screen Personas, Lumira, and advanced geospatial dashboarding and business objects. Our next series of webinars are really going to focus on some of the core functionalities of SAP, as some of those are really changing. So we're very excited. We're going to go through a little bit of an overview of Dickinson and Associates, and then Jason Bliss is going to give us a detailed demonstration of a day in the life, if you will. Basically executing an end-to-end planning scenario to generate an annual budget. So with that, if you could advance the slide to the next one, Jason. So really what we want to talk about first is why SAP and why Dickinson and Associates. So BPC really falls under the analytics umbrella of SAP offerings. And frankly, SAP leads that market. And many of us have seen the analytics maturity model, if you will, that's shown on the screen today. And what SAP solutions do very, very well, given their integrated solutions and enterprise type solutions, is move you along this curve. So what we really focus on today, even though it's not traditional analytics, is how a forecasting solution such as BPC can get you from raw data, spreadsheet-based planning and forecasting, down the path to true analytics and analytical forecasting. Next slide, please. So before we get started, just a little bit of an overview of who Dickinson and Associates is. We are a company of about 140 consultants. We've been in business since 1998, and we, at a high level, are a full-service SAP consulting firm. We are a reseller of the software. We are a reseller of the maintenance on the software. And we support you basically everything from your strategic planning for your deployment to the actual implementation to post-go-live support. We do everything in SAP from core ERP implementations, now really known as S4 HANA implementations, to analytics, to mobility, and to database and technology such as SAP HANA capabilities. Next slide, please, Jason. We've got many partnership designations. We're an SAP Gold Channel Partner, which is the highest level of partnership that we can have with SAP. And pertinent to this presentation today, we are certified in SAP Business Objects from both a software reseller perspective and an implementation perspective. Next slide, please, Jason. Okay. I'm now going to hand the presentation over to Jason Bliss. Jason leads our EPM, Enterprise Performance Management practice here at Dickinson and Associates. I'll let Jason do an introduction of himself, and then we'll proceed with the webinar.
Thanks, Rob. Hi, everyone. My name is Jason Bliss. I'm a BPC consultant with Dickinson, and my background primarily spans across SAP planning solutions. I've been working in that space for about the last 7 years. Really beginning with sales and demand planning from an APO perspective, worked through some BW integrated planning scenarios, and recently working strictly in BPC. So today, like Rob said, what we want to do is take a high-level look at BPC planning and how that can really be applied to a typical environment to support the annual budget. I'll also go through a couple of the key features of the latest version of BPC, and then also kind of touch on some of the new planning applications that SAP has in the pipeline. So first of all, because we may have some people on the call that aren't necessarily familiar with BPC, I want to give an overview of the solution first. Really, BPC is an application that streamlines your financial and your operational planning, along with consolidation features, into a single application and user interface. We use Microsoft Excel as the primary front end to help users use a tool they're familiar with. They can plan more efficiently and improve budget cycle times. It also gives us full audit trail capability, so we can track everything throughout a consolidation or a planning process, and also have full visibility of budgets and actuals. BPC 10.1 is the current version, which is what we're going to be demonstrating today, and that's part of what SAP calls the EPM, or Enterprise Performance Management Suite. And to give you a little history, BPC goes back actually prior to 2007, when SAP acquired OutlookSoft, a separate software platform. And SAP does support two different versions of BPC, which really only differs by the underlying database. There's a Microsoft version, which is targeted for users that are not users of SAP Business Warehouse. And then there's the NetWeaver version, which is what we're going to look at today, fully integrated into the SAP landscape, and it actually sits directly on your BW environment. This allows customers to leverage their existing BW infrastructure as well as their skill sets. Okay, so what can BPC do, and how is it typically used? First is consolidations. Really what this entails is all the aspects to collect data throughout an organization, perform currency translations, intercompany eliminations, and drive towards your financial statements for management or statutory reporting. We also do financial reporting and analysis. BPC, because of that Excel front end that I mentioned, enables ad hoc reporting as well as detailed, formatted financial statements and other reports. And really the key thing here is that it empowers the business user, since it's on a familiar platform, to build and manage the reports instead of relying on the IT organization to build those. Planning, which is where we're really going to focus today, has several different things, but it really drills down to how you plan for revenue and expense and various aspects throughout the organization. It enables us to look at versions. We can plan for several iterations of a budget and have a what-if capability to look at how will a currency rate change flow through to the final result, or how will a new product line impact our final financials. And then finally, there's forecasting, which in BPC is, when I say forecasting, I say it in the terms of how we look at our plan, how we compare that to actuals, make necessary adjustments. This can include rolling forecasts and an iterative process, and so on. And this is by no means all-encompassing, what you see here, but really just wanted to give you an idea of the range of applications that you can do within BPC. And another thing to highlight here is really that all of these are on one single platform, which is unique to BPC, and that it gives you several benefits, mainly being you have one version of the truth. You have one source of data to maintain. All right, so now that we've gone over a quick overview of BPC, let's really dive down into planning. What you see here is a baseline example of how planning can be used, but consolidations, on the other hand, which is the other portion of BPC, where that's more structured and centered around regulatory compliance, planning is very flexible, and it can be tailored to however a business runs their planning process. In this example, what we're looking at is how we can have several different, what we'll call BPC models, feeding into our final budget. And this is similar to what we're going to demonstrate today, where we're going to load inputs from sales. We're going to have some HR planning, some expense planning and Capex, and how this will drive through our final budget. Now, BPC also supports a mix of methodologies to do this. We've got top-down, bottom-up, and driver-based listed here. When I say that, from top-down planning, that's really centrally based, where you're going to drive a agreed-on metric from the top level down throughout the organization. For example, you want to increase your plant sales by a blanket percentage, or you want to plan to reduce costs by a certain percentage. We can take that and then push it down throughout the organization. Bottom up is more decentralized, so we're looking at planning at a very detailed level and then rolling that up and seeing how it drives to the final at the top level. And then driver-based is where we have key metrics or inputs or values that will flow throughout the plan. So for example, we could have a driver such as a fuel rate or a vehicle maintenance rate that would then drive for freight cost. So we can maintain that single driver so that if the cost of fuel goes up or down, that'll automatically be reflected in all the downstream aspects. All right, so after that, this shows the monthly process of planning a BPC. And really what we're trying to show is that it's iterative. In this diagram, it's fairly straightforward, but this is typically what it looks like within BPC. We first load, starting on the right side over there, we first load our actuals from the source system. That could be ECC, could be an external ERP system, a fixed asset system, an HR system, could be any type of source. Once we have that data loaded into BPC, we're then going to go through reviews. We have reports, and we can have pre-configured variance reports. We could create ad hoc reports, and you'll see that as we get into the demo. But what we're trying to drive to is the comparison for plan and actuals in that second step. And then once you do your comparison, we make a review. We may find that we have to make some adjustments to the plan and the forecast. And as I stated earlier, the adjustments could happen in any number of different versions. So it really gives you a powerful what-if analysis capability. Okay, so before we get into the actual demo, there's a couple things that I wanted to highlight that they're new and emerging technologies that SAP has been introducing recently. So since some of you may be familiar with previous versions, we'll first look at a couple things that are different between 10.1 and previous versions, maybe if you're an existing customer on 10.0. There's two key things that I really want to highlight that are different. First is that we have planning supported on two different platforms, one being standard and the other being embedded. So really what that means is standard, which is what we're going to look at today, is similar to what you've seen in previous versions. Embedded is geared towards customers that may leverage something called BW integrated planning, where our underlying data model can be built on existing BW cubes and info objects rather than the traditional BPC dimensions. So you'll see as we go through how a standard approach would work, but just wanted to highlight that difference. The other is the new interface. So if you're familiar with 10.0, BPC 10.1 will look a little different in that it's built on a new web interface that's on HTML5. What that does is give you some enhanced navigational aspects. There's also some enhanced support for mobile applications. SAP actually has a app that is on the App Store for Apple right now. It's called EPM Unwired. You can download that and set it up so that you can actually access BPC web reports directly from an iPad. It also gives you a streamlined look and feel with other applications such as Fiori. All right. The next is integrated business planning for finance. So I know that this is probably something that a lot of folks have heard about. We're hearing of S4 HANA, Simple Finance. These are probably familiar. So one of the components in that Simple Finance add-on is called Integrated Business Planning for Finance, and you can see it highlighted here in the org chart. Essentially what this is, it's the planning features from BPC that are attached directly to ECC on HANA. It gives you a couple things that are different in terms of traditional BPC. We're connected directly to the source, So we don't really have a BW dependency or extraction component to get the data into BPC. This solution is really targeted for customers who are going towards simple finance, but I don't think that anyone who already has BPC or is interested in implementing BPC is really at risk of losing their investment here, because you would have the option to retain BPC as it is, or you could migrate some of those planning functions into your simple finance add-on here. One thing I do want to highlight, though, in that last bullet point is that consolidation, if you're using BPC to do your consolidations, that's not included in this portion. That will retain for the current time frame. That will stay in the BW side on traditional BPC. All right, lastly is SAP Cloud for Planning. This is also a new app that was recently announced and rolled out. And as the name implies, it's a solution that's entirely hosted on the cloud, and its intended purpose is really to complement BPC, not replace it. What it does is it gives you an ability to push out what I'll call a collaborative planning environment for specific SBUs or local businesses, so that they can have a version they can work on, modify on the fly. There's some built-in dashboards and KPIs that they can use so they can do analysis directly in the application. And then data is transferred back and forth from SAP Cloud for Planning to and from BPC. So this is, like I said, just released, and it may be something that's attractive if you want to provide some additional flexibility in how you're allowing your business units to manage the plans. Okay. So now we look at some of the new features and some of the new things that are coming out. Let's shift back and we'll look at BPC and how it's really applied to a real-world budgeting scenario. What we're going to try to do is show you a day in the life, as Rob said earlier, for a business user to do an annual budget. We're going to look at two perspectives here. One being a corporate controller, so to push down top-level targets. And then we're going to look at a line of business manager who's going to be the budget owner for a subsidiary. In this case, it's going to be Italy. We'll also go through an overview of navigation, so you can see the ease of use and simplicity here, and how that applies to a budgeting scenario. And overall, really, this demo is intended to show you the art of the possible. We're going to cover a baseline scenario, just like you saw on the slide a few slides ago, and see how it can apply to this company. Company in this example, we're going to call Best Run Corporation. Okay, what are you going to see in this demo? We're going to initiate our targets, push it down to the top level. That's going to include allocations down to Italy. We'll then shift our focus to that Italian unit and look at how a business manager would manage his plan, with entering various revenues and expenses throughout the organization, including sales, revenue, HR, expense, Capex, and then we'll look at how this is consolidated into the overall corporate view and how we can publish reports based off that plan. So that being said, I'll flip over to BPC and we'll start the demo portion. Okay, so what you see here, this is our central console for when you log into BPC. It's web-based, and a few things to highlight immediately. We have based off user, you can maintain favorites. These could be reports, dashboards, anything that a user wants quick and easy access to. The other front end of BPC, which I'll launch here, is Excel. And you'll see this as we work through the demo. But what I want to highlight here is that this is native Excel. This is not a virtual version. This is Excel installed on the machine with two additional components or add-ins along the ribbon. We have EPM, Data Manager, we have this context bar, which you'll see as we work through the demo, and we have our connection information over here. Okay, if I flip back to our web client, one thing that jumps out is along the top we have our navigation pane and we have my activities. The first thing I see here is that I have 12 alerts, indicating that for the user that I'm signed in as, I have activities that I need to address. So I'll drill in here. I've got several things set up. What you see here are called business process flows. It's BPC's equivalent of a guided workflow. And we're going to work in the annual budget. This gives you a couple things because you can streamline your steps if they're repeatable, such as an annual budget or a consolidation. It also gives you kind of an overview from a management perspective of progress, because I can look and see within each workflow how many steps have been completed. So I'm going to drill into annual budget here. All right. There's several steps here, and we'll work through each one individually here. And in the interest of time, I won't hit everything, but we'll touch on key aspects within each area. Notice how the steps, like I said, are streamlined here. And we won't start at the top, but I'll give you an overview of what we're assuming here. So what this is, for our company and our Italian, or we'll start at the corporate level here, we're now, let's assume that it's October, and we're entering our budgeting cycle for the upcoming year. We're going to use 2015 in this case. We're creating our budget for 2015. Because BPC allows you to create multiple versions, we've already, in this example, gone through one version. We have a budget version 1. We have the ability also to copy that version into another. You can do any number of versions that you want to create, or for any number of what-if scenarios. Now I'll launch this just to show you. The baseline of what we're starting with. Here we have budget version 1, which was just completed. We've copied budget version 1 to version 2. We're starting off with all of our totals equal. So first thing that we might want to do when we're starting our budget, we may want to make the assumption that some input rates are going to change, or we need to maintain these rates to start the budget. These are our top-down drivers here. We'll look at currency rates. Okay. This is a BPC input form. I can maintain my rates here. These can be imported from a source system. We can download these from a web service. We can input them directly here on this web template. You can see that we can maintain multiple types of rates, and that may be an average and a closing. And we can have that reflected over the entire budget year in case we have currency changes that we want to capture. Notice that I have, in this view, I'm looking at it in terms of US dollars. So I can maintain all other currency relationships as it relates to US dollar. So I've already maintained my rates. Just wanted to breeze over this. Same thing with HR rates. We may want to set some input values here. This shows you how you can use HR drivers and assumptions from the beginning. In this example, we're able to maintain our HR rates in terms of percent of salary. We can do cost per head. And we can also maintain FICA caps. And you'll see how these drive to the HR budgeting process when we get to that. I just wanted to show the input rates. And then the other rate we'll look at would be Capex rates. Often in a budget cycle, you have different parts of the organization are planning their budgets independently, and they're making their own assumptions. By doing a centralized cost assumption here, we can make sure that commonly purchased assets, like a laptop or a printer, we're using the same assumption across the organization. You may already capture this in a fixed asset system that we could import into BPC, or you could maintain them directly in an input form like this. Okay, so now that our rates are there, first thing we want to do is set our top-down planning targets. As I said, we did copy our version of Budget 1 into Budget version 2. And maybe we want to make the initial assumption that we're going to increase our revenue and cost by 5% for this budget version. The BPC gives the ability with built-in planning functions to assign weights or whatever values you want. I can increase this by 5%. I see my numbers automatically updated. I get my new total here. I can save my changes. Because this is native Excel, I could do this through a formula or could calculate it offline. And just to show you how this is working, we're retrieving all of our information from the database. And just by simply saving, I can see that my numbers are stored, retrieved, and I have the same information. All right, so now that we've set our top-down targets, we want to push those down and allocate those out throughout the organization, including our Italian entity that we're going to look at. So I have a link to my business process flow. This is going to match exactly what we saw in the web portal, all the same steps here. And I'll run my allocation. This is a job that can be configured. You can have flexibility in how you do your allocations. And what I'm going to do here is run for 2015. I'm going to allocate from the top-down level, E00, it's my corporate ID. You have flexibility here to plan at any level, so we could allocate down from a subsidiary if we wanted. And I'll run that. Now what's happening is when I execute that, I've got a job running in the back end, and you can see that it just finished. Top-down allocation run right now at 11:30. Succeeded. All right, so if we go back, and we look at our version comparison, we'll see our targets here. So we've allocated our targets here. Now, I mentioned this EPM context. What you see here are all the different dimensions that drive a BPC report. This gives us the ability to dynamically change. Maybe I want to look at, instead of a corporate view, I want to drill in and see it just Italy's view. I can change my context, refresh, and now I'm actually seeing the results of that allocation, what was pushed from the top-down target to Italy. So again, note that we're starting off with our revenue and all of our P&L accounts equal in our budget versions here. All right, so what we just did is from a corporate view, this would be traditionally done by a controller or someone in that role. We set our top-down targets. When I'll change perspectives, this is going to be from a Italian budget manager perspective. we're going to start the plan with entering revenue and cost of sales. Okay, so in this example, the business manager from the Italian company here is reviewing the top-down targets that he just received, and he sees an increase for this iteration of the budget, and so we're going to make some adjustments to our plan. For example, we know that we have a new product line being introduced here, and it's product 4. We don't really know exactly how this is going to work in terms of the monthly totals, but we know that we expect to sell about 500 units of this new material throughout the year. In our input form, we have units, we have rates, and amount. But we know our units are going to be about 500. I can come here and I can use another planning feature for spread. I can make that assumption that we're going to have 500 units. I also know that it's going to be similar to product 1 in terms of seasonality. So I'm able to take the totals, product 1, use a similar spread, and write a result. You can notice that our 500 is posted here. Allocations are based off of what we see for product 1. Maybe I also want to put in a comment. I'll say that we're basing our seasonality on product 1. And I'll save these changes. Note the formatting, how you can have it display changes. And also the comment I just input displays like a normal Excel comment would, but it's actually on the database side, so we can run audit reports and retrieve these comments in batch. In terms of rates, we're going to make a similar assumption that all of our costs are going to be similar to product 1. So just because it's native Excel, I can copy and paste like I normally would. And maybe we want to, let's raise our revenue by 5% on this one. So we'll weight our revenue by 5%, get a slight increase, and then we'll save this as well. So now simply by maintaining for new products, we've got our amounts, we've got our units. Come back to the top, we'll refresh here. Now note, product 4, I don't have anything at this level, at this point, for profit. But since I've maintained my units and my rates, I'll refresh my report. Dynamically, I've got profit here. And just to highlight what we're seeing in this report, based off the way we formatted it and set our context, we're seeing direct profit after cost. And note that we've got $10,300,000. Okay, so now that we've done our revenue plan input, we can check a comparative report in terms of KPIs. I'll launch this report. Note that we're comparing budget 1 and 2. I've now got units for version 2 that I just input. Also got profit. Also see here how our profit is 13 million. It's no longer 10 million. So where did that change happen? Well, this report we're looking at it in US dollars based off our context. What we're trying to show here is that translation and any back-end rules can happen immediately. As soon as we submit those changes, we're actually, based off the rates we maintained earlier, we're already going to recalculate through currency conversion. Since that was Italy, I can change to euro, refresh my report, and here's our totals. All right, so now that we're done with the revenue portion, let's just kind of recap. We've set our targets, we've input our assumptions for a new product line and changes in prices from a revenue standpoint. Now let's look at some expense planning. We have HR budget. I'll drill into the enter employee information report we have here. And as you'll see in this example, we actually have it set up to plan at the detailed employee level. Many customers may only do this in terms of position or job code, but BPC can facilitate either approach. And this is a typical example of how you can handle HR planning with BPC. We have employees tied to positions, and we can perform a variety of HR functions here, such as merit increases, transfers, promotions, terminations. To show this, I'll make the assumption that this employee, let's say he was the top performer, and we're going to increase the raise to 10% over the standard 4%. Through standard Excel, we can do conditional formatting, but if you exceed the limit, we get an alert. But we're going to accept that now. Go ahead and save the data. Showing this is submitted. So after the Italian manager has gone through, maintained all of our promotions, terminations, raises, whatever HR functions are occurring, just like we saw on the revenue side, those changes are going to drive through to the expense side. So I can look at the employee that I just adjusted, see the new salary values, and have those drive several different benefit calculations and other expense calculations, with the net result being a total personnel expense. Okay. We'll move on to expense budgeting. So we've looked at revenue, HR. We now want to look at expenses. Okay, in this scenario, what you can do is have a report where we can compare our prior year forecast to how we're going to plan at the top level for this year. We've got, in this input form, we can increase or decrease by set percentages. We can put in a set value, and then we can use a number of different methods to determine how we want to spread that out over the course of the year. So let's say that supplies, we're going to make a change based off some input we received. We're going to go up by 8% instead. We can also change our method for spread. Maybe we want to base it off of weeks. And you can see my totals change here dynamically over that. You can also, let's say that we had an insurance quote come in, and we know that this is now going to go up to $60,000. You can put in a set value, and also have that flow through and update our totals here. All right, so now that we've maintained our expenses, we can do an expense comparison report. Let's just take a look at how budget 1 versus budget 2, how it compares in terms of expenses. This is a simple example of how we can build a variance report. You can see supplies, the increase we had of 5%. We have the variance calculated. And similarly with insurance, we have a flat increase of $60,000 here. And these are going to drive down to a total change in your operating expense. So this just shows how making changes here can flow through the entire calculation of the system and how you can easily compare those differences. All right, next is Capex. We've now maintained our revenues, HR expenses. We've planned for various expenses such as insurance and supplies. We may want to look at expected Capex expenses throughout the year. Okay, this is split by project, assets, and note the standard cost here. This is driven by the rates we maintained and the assumptions we had on the cost per laptop and other assets earlier in the demo. We can make an assumption that we want to plan to buy 3 laptops in February as a replacement. So in order to input here, we put our 3 expected in February. And also I'll note here that we have depreciation calculated. We could store depreciation methods and asset life based on asset classes, and we could then calculate depreciation automatically. You can see throughout the year we have some more laptop expenses. We've got a couple comparison reports for project and asset class. Take a look at this one and we'll do a comparison of Capex by project. You can see the PC replacement where we initially put 3 expected in February. We have that captured here. And also note that we're showing a year-to-date total. We don't actually expect another expense to be incurred in March. It's based off of our context, so we could flip this to periodic, refresh our report. Notice how our year-to-date 2015 total doesn't change, but in terms of reporting, we're only capturing what period the expense is incurred. Okay, so we've gone through our targets. We've now set expenses and revenue at various levels, and we've looked at how that can flow through to the P&L, how does that impact our net income and total expenses? But there's also some drivers that can impact the balance sheet as well. So I'll open this and show you an example. This is typical for many customers, where you might have some metric that you look at to figure out how changes to your P&L are going to impact the balance sheet. So we've got assumptions here for DSO and DPO, days payable outstanding and days sales outstanding. And really the idea here is to identify those relationships that you expect between P&L accounts and the balance sheet. And what we can do with that is we can take changes in our budget, and that will automatically update our balance sheet. That way users don't have to go in, manually input every line of the balance sheet. I'll leave the rates as they are, and we'll take a look at the balance sheet report. Again, comparative report, we can see how changes in this budget version are impacting our accounts receivable. And that's all based off of our changes to revenue expenses and those assumptions that we have that we just looked at. Okay, so we've maintained everything we need for our budget. We've put in all of our planned expenses, all of our planned revenue changes. We've looked at the balance sheet. This is where, now that we've completed all of our input tasks, there may be a couple other things we need to look at before we finalize the budget. Let's open up this product profitability report, and I'll show you an example. In this scenario we've walked through, all of our revenue and expenses, or all of our expenses rather, have been input at a overall level for the company, for Italy. And we don't have anything allocated out to the product line. Well, we want to capture that information before we publish our budget. Bear with me here. Okay, RJ, looks like we're having some issues on the server. I don't know if you want to open up for questions in the meantime, or if you have any input, RJ, you want to share. I'll try to get reconnected here.
Yeah, why don't we give you a moment to try to reconnect. If we can't, my suggestion, Jason, would be to provide a summary of what we've seen and just kind of wrap it up, and we'll go into questions. We're 10 minutes until the end of our session today. So why don't we take that approach since you're having trouble connecting?
Okay. I'll keep trying to reconnect, and then we'll open up in the meantime.
So, Kate, why don't we proceed with some of the questions that have been posed throughout the webinar. We can address those and see if Jason has any luck reconnecting.
All right. We have a question specific to the web-based front end. Is that available today?
The web-based front end is available. That's part of core BPC. So when you install the BPC component, that's actually the way you sign into the server. That's where you do all of your configuration from a business user perspective, as well as how your administrators are going to operate. The version we're looking at now is 10.1. So like I said, there are some changes, but that is the standard functionality with BPC 10.1.
All right, another question we've received is, we have our U.S.-based corporate business running on SAP. We are considering BPC for consolidations and planning, but we have several foreign subsidiaries that are not running on SAP. How is this best handled?
Okay, I think what you're talking about there is you've got multiple sources of data. Some aren't being normalized into SAP at this point. And if that's the case, then there's several ways to address that. The way we typically do this, and RJ, I'll let you also chime in if you have input, but we can handle it through either importing actuals directly into our BW system. So what I mean is you're most likely already taking every company on ECC and pulling your actuals and your plan data into a business warehouse environment. We could just, through flat files or other methods, we could pull that information also into our business warehouse and then feed it into BPC. The other approach, if you don't want to go through the steps of pulling that information into BW, we can also just load straight through to BPC. Use a flat file to load directly to BPC, or you can use these input forms, which is what I've been showing you throughout the demo, how you can maintain your numbers in an Excel sheet and save it directly to the database. RJ, do you have anything to add?
No, I think that covers it, Jason. Really, two main messages there. We can either do it on the front end of BPC via input forms, or we can bring data into the underlying BW from the back end perspective. Thanks.
Another question we've received is, we currently use BPC 10.0 for both planning and consolidations. What would an upgrade to BPC 10.1 involve, and what would migrate?
Okay. So 10.0 is fairly similar to 10.1 in terms of the standard model. So if you think back to earlier when we were looking at, there's two different approaches to handle planning. And standard model is essentially the same approach that we've used in 10.0. So if you're using 10.0 right now, that functionality would migrate. What you're going to get out of doing that migration would be the new front end. That's the web client we were just looking at. So you have a different way to navigate. You have some added capabilities with mobile if you want to start pushing out iPad use, and other than that, your Excel UPM front end is going to be the same. On the back end, if you're going standard to standard, it's going to migrate. However, if you want to switch to the embedded model, there is some degree of re-implementation that has to occur. There's no real smooth migration for BPC 10.0 to 10.1 embedded. So just to summarize, there is a clear migration path to go from 10.0 to 10.1 if you're leveraging your existing planning features and models. If you want to migrate and switch some of that to the embedded approach, there is some re-implementation there.
All right, another question that we received is, what kind of performance improvements are seen when implementing HANA versus traditional BPC?
Okay, so BPC 10.1, if it's installed on a HANA database, which is what we're looking at today, there are features that run on the front end versus back end. So I think your reporting performance would stay fairly similar. What I think the direction that SAP is headed is to try to push as much of the calculation logic down into the HANA layer. So what I mean by that is that if you have a sales plan that you run that has a lot of detailed calculations and you drive down to a really low level of detail, maybe the SKU level, then you may want to consider using HANA, using the embedded approach to handle that type of planning. But yeah, I think there are some performance improvements that you'll see if you're working with large data and you move from 10.0 to 10.1 on HANA. Even if you don't re-implement that embedded approach that I'm talking about, I think there's still going to be some, just simply by the way it can access and recall that data and the volumes, you will see some improvement there.
All right, another question we received is, you mentioned the standard versus embedded planning models. Are there any benefit to choosing one over the other?
Yeah, I think that kind of plays on the last question. It's, it depends on the application, the type of planning that you want to carry out. We've done many successful implementations using the standard approach, using what we looked at today. If you are, let's say that you're an existing customer who uses BW integrated planning, I think in that scenario it makes a lot of sense to look at leveraging BPC embedded. That's going to migrate much more cleanly, just because the content already exists. If you're a new customer and you're looking to re-implement or have a fresh implementation of BPC, that's something that would definitely be covered in a blueprint. Look at how you want to execute your plan and which type of approach would fit best. You can't have both. So you can't have a BPC environment that works with a mixture of both. Sure.
We're actually coming up here at the end of the top of our hour, and I wanted just to kind of wrap up our session here today. Thank everybody for joining. There were some questions we didn't get to, and we're going to collate that list, and we're going to get back to the folks that raised those questions today via email or direct phone conversation. I would encourage everybody who attended today to look for our next webinar, which will actually be on the topic of SAP Predictive Analysis 2.0, which was announced at the SAP Insider Business Analytics and HANA show about 2 weeks ago. So we'll be putting out publications for that. Kate, I think with that we can wrap up today's webinar. And again, I thank everybody for joining.